The macro charts are undoubtedly bullish for Bitcoin. However, the bears could still reclaim control. In today's video, we're going to be discussing the exact conditions the bears will need to achieve to push the price back into a downtrend. Let's go ahead and jump into the video. Okay, Mayworld team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic week. In today's video, we're going to be discussing the bearish perspective, what we need to see from the bears to enter a new downtrend, how the higher time frame charts are shaping up, and the key warning points we are looking out for these rejections to occur. As you know, the macro charts are looking healthy. The 4-year cycle as of right now is intact, and the price is behaving / checking off those boxes we are looking for a macro uptrend. However, we are not quite out of the woods yet, as we are retesting the major and most significant horizontal resistance on Bitcoin's chart. The resistance that will either make or break Bitcoin's trend. The resistance that will determine whether or not Bitcoin will enter a macro uptrend and continue upwards, or potentially reject and be a risk of creating a new downtrend. We're going to be discussing the exact conditions in which we need to see from both perspectives for these scenarios to play out. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, data, technical and structural information, news events, and relevant economic data. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, go ahead and join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with Bitcoin, cryptocurrency, and of course the economy. If you're interested in our VIP channel, we post trading signals with exact entries, exact stop losses, exact targets, 185% profit on Link, absolutely huge, 51% profit on this long over here on Bitcoin. As you can see, entries, targets, stop losses. Not only will you get access to our main chat where we post all our trades, you'll also get access to our group chats with all our members learning and trading on a daily basis. To find out more information, go to our free channel, click the links, go to our pinned comments, and you'll find it all over here, including our entire trading track record, as you can see over here. Let's get into a video starting off with the market data. How are we looking for today? Currently, the volume is sitting at 83 billion. Not too high, not too low. Pretty steady, up 29% within the last 24 hours. As we can see, liquidations are sitting at 83 million. It is up 60% in the last 24 hours, and every single time we see the Bitcoin price kind of plummet below this 29.8k level, we enter this range of liquidity. There's a huge gap in here, over here on the VRPV, and we do generally see a heap of liquidations every time this lower liquidity level is grabbed, and it explains why we have seen a surge in the liquidations over the last 24 hours. Moving on to those liquidations, we can see on the breakdown over here, we're still slightly in favor of longs, so still slightly more longs being liquidated than shorts. And again, that once more can be attributed to the fact that we did lose this lower support level once more, and a lot of longs were wiped off. But all in all, still a pretty even split, as the price is more or less pushing toward that sideways direction. Looking at the DXY has seen a significant move upwards, guys, in the last 24 hours, doing what we expected, which was a bounce from our lower support to retest this upper resistance range. We do not expect too much decision from this range until we get that important news event, which is going to be the Federal Reserve rate hike. This is sitting on the 26th of this current month, so in about 6 or so days, we'll find out whether or not they're going to be pausing, they're going to be easing, or they're going to be hiking by 0.25. Of course, we're going to come back to this later in today's video, as it plays a massive role in the overall macro direction of asset prices, particularly risk assets. So we'll come back and discuss that. If we do see it go up, however, the DXY, we can expect the markets to correct. If we do see the DXY lose its support, we can expect the markets to do very well. This middle range here is nothing more than chop and consolidation. We don't expect the markets to react too much while the price consolidates between. We only expect a reaction once these key trigger levels are broken. So a loss of 99, a breakover of 101.5. Moving on. The S&P 500 has deviated above our resistance. Again, not too convincing so far. Still looking a little weak over here, retesting these high levels. Again, we do need to see a weekly close above this level to invalidate. Until then, this area can still be deemed as a degree of deviation. Really important. We do have that Federal Reserve rate hike coming up very, very soon, and that will be playing a massive role in determining where the S&P 500 actually goes on the higher time frame. For now, the uptrend is still intact. However, we are up this upper range of resistance, and therefore the favorable risk is in favor of shorts over longs. We've been bullish ever since down over here, so we're not saying we're bearish. We are saying on the smaller time frame, I would not be positioning myself in longs. I'd be looking for shorts, and that goes for both markets. Let's go ahead and take a look, guys, at Bitcoin. So there's a lot I want to talk about on Bitcoin today, but we're going to start off with the crux of the matter. I wanted to briefly interrupt today's video to discuss my favorite exchange, BitGet. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than BitGet. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our Mega Whale promotion campaigns that we run every few months. Alongside that, guys, BitGet is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. BitGet also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, BitGet offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to BitGet. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. We talked a lot yesterday about all of the bullish scenarios, what the markets are looking like on a smaller time frame, what the technical indicators are suggesting on the macro chart, what the 4-year cycle is saying, and to summarize it all up really quickly for you, everything is almost going perfectly as expected and as we have seen in prior cycles. And to give you a really quick rundown how that is the case, if we look at an indicator called the Gaussian channel, we can see the Gaussian channel weekly breakout has every single cycle been at the same time as the point of which we break above our major horizontal resistance, being this yearly low point in our last cycle and this cycle. We have seen almost every time, well, we have seen it every time, when we break above the Gaussian channel weekly and close above it, we have seen an eventual continuation upwards through our base of resistance, which results in a continuation upwards to retest the high point, which is going to be the candle close, not the wick, the high point of the candle close of the dead cat bounces. You can see over here, we came up and retested again. You can see over here, we retested again, and you can see in this instance, it'll be around 48 to around 47,000. So if we're looking at the 4-year cycle, if we're looking at what we're looking for the 4-year cycle to play out in terms of a date range trend, in terms of a technical trend, we're looking at what we're seeing on the chart now, and we're saying to ourselves, well, everything is being checked off. All the boxes are being checked off. The last box that really needs to be checked off is the current resistance range, the current range of which we are retesting. If we are able to break above this range, this will flip this entire downtrend right over here into deviation and push the prices back upwards. So until that occurs, we have to understand resistance is resistance until it is not. And therefore, whilst we remain underneath this resistance, regardless of how good the technical indicators are looking, regardless of how the price action is shaping up, regardless of what the economy is suggesting, we have to be aware that resistance is resistance. And when we reach resistance, it is not the time to be hedging into longs. It is a time to be taking profits on the longs you should have already taken. If you're following the channel, we took longs here and we took longs over here. You should be taking profits on your longs that you should have already taken and looking to hedge toward the downside in case a direct rejection occurs at this resistance. So let's talk about the technical indicators that are suggesting weakness. As yesterday's video was all about strength, and I want you to go ahead and watch yesterday's video if you have not already, because we talk all about the bullish case scenario in massive depth. So check that video out. But today we're focusing on the weakness. So what are we seeing over here currently? Well, point number one, we have our long-standing horizontal resistance. In fact, this is no ordinary resistance. If we break above this level, we flip from a weekly uptrend into a monthly uptrend. So it's actually a bullish trigger. If we take a look at our resistance, what we can see is we can see the RSI is now pointing downwards. We have decreasing momentum while we have rising price. This is suggestive of a bearish divergence. This represents a discrepancy between the direction and strength of the price action. If we look at price strength, so strength, we take a look at strength and we say, well, strength is a combination of certain metrics. One of the metrics being momentum, we got volume, we got speed, we got all these different metrics that can go in a list that are basically a combination that determine the overall price strength, right? So we're seeing momentum fall. This is a direct reflection of weakness at resistance. And this is something I want to discuss because if it develops, it could result in a move toward the downside. The second point I want to bring up is the key horizontal level on the weekly chart. That being the 62.09 horizontal trigger point on the RSI. We have officially broken back underneath it. Every single time we fall from the top side of this RSI point down, we end up seeing a correction. We can see over here, we saw a big correction. We can see over here, we saw a big correction. We can even go back over here a few weeks ago and we can see we saw a 20% correction. We can go back in history. I can show you many, many more scenarios. Let's do one more over here. We can see a 20% correction or 15% correction. We can go further back and take a look at this scenario over here. We lose this point, we see a correction. We are seeing another drop and break below that 62 point on the RSI. This signifies a shift in momentum from decreasing positive momentum to strengthening negative momentum. This is not a sign of strength. Now, here is the important thing. A lot of people are going to be jumping on this and saying, well, this is enough to confirm that Bitcoin is going to drop. This is enough to confirm that Bitcoin is going to go all the way down to 15,000 or 10,000. And I have to tell you the shameful answer that that is just not the case. Momentum is particularly awesome at projecting the direction of price action, but awful at telling us where the price will end up going. I'm going to say it again. Momentum, and by extension, technical indicators, are not designed to predict where the price will go or tell us where the price is going. They're designed to infer the strength of price action and thus the probabilities of certain directions. So this is not enough to say with certainty the market is going to crash. We can attribute this weakness to consolidation. After we see large rallies on the upside, followed by sideways price action, the momentum goes from strong up to sideways, and that represents a curve on the chart such as this. This relates to weakness. This decreasing in strength over here, or velocity or angle of the curve, or what you want to call it, is represented by falling RSI. It is represented by the RSI falling down. This doesn't necessarily mean that we are seeing bearish compression or bearish consolidation. It's just a derivative of what the price action is doing. The price action is moving sideways after an explosive move upwards. The sideways price action, the momentum in this range is significantly lower than the momentum in this range, and that is why we see the RSI fall down. So it's representing a weakness. It's not predicting where the price is going to go. So point number one for the bearish argument, we see the momentum is weakening. But we can counter that and say this alone is not enough to suggest the price action is going to fall down to 15,000 and enter a new macro downtrend. But what can suggest that is the economic condition. If we take a look at macro price action, the key macro drivers are economic, political, and social, EPS, okay? These conditions drive macro price action. Now, a lot of people get this mixed up. The market is not the economy, and the market is not a reflection of the strength of the economy. The market is based on perceived systematic risk. The market front runs overall risk in the economy, and therefore we see reversals and corrections before we see the data present in the actual economy. I'm going to go back and talk about the interest rates now because this is where it becomes relevant. For the market to correct into a new macro downtrend, a correction strong enough to break the weekly uptrend, invalidate all of the bullish signs we are seeing on the chart and all of the similarities we are seeing in this cycle to the prior cycles, we need to see the trajectory of perceived systematic risk shift negative, meaning we need to see a increase in the risk in the overall market that is large enough to add a degree of future risk in which the market will try price in and correct as a result. If we look at the risk beta, we can see systematic risk is elements of risk uncontrollable by the investor, which shift return to risk relationship. These include interest rates, inflation, taxation policy, monetary policies, economic policies, governmental policies, and societal perspective. When we see the interest rates rise, we see a direct impact on the systematic risk. This is our risk curve based on interest rates. We can see, if I go ahead and label this out over here, this was November. We saw interest rates plateau. We saw them start to come down. We saw inflation plateau, and later on, as a consequence, interest rates plateaued. When we saw that go from 0.75 to 0.5 and then 0.5 to 0.25, this created an overall downward trajectory for future interest rates, which resulted in the overall perceived systematic risk in the market decreasing, which increased the beta for these risk assets and the risk return relationship, which pushed prices upwards well before interest rates even pivoted or paused. That resulted in the markets, Bitcoin, traditional markets, going toward the upside for the last 7 months. We saw it coming. We knew how it works. We have an economic background. We understand this stuff and we capitalize. We are saying this now. Interest rates have done this. We're going to show you on this curve right over here. We saw interest rates do this. They came down. Awesome. They came down and now they have paused. Okay. This is very important, as the perceived systematic risk has now been interrupted. The expected trajectory of which we had has now been interrupted. We have a sideways trajectory. To top that up, we have been told that we should expect 2 more interest rate hikes in the future. To top that up, we know that the next interest rate hike has a 97% chance of being a 25 basis point hike. If that occurs, the perceived trajectory starts to do this. What happens to the systematic risk? It increases. We already told you, the markets front run perceived systematic risk. If the perceived systematic risk increases, what happens to the price action? It goes down. If the market is expecting perceived systematic risk to increase as a result of these economic policies, what happens to the price action? There is indecision between bulls and bears. There is indecision between buyers and sellers. There is compression. There is consolidation on a higher time frame. That is exactly what we are seeing right now on the charts. And the interest rate hike is going to tell us whether or not the concerns of the bulls are going to come to life and result in a correction, or the bears are simply wrong and the price will break upwards and continue upwards. So I'm going to say this: for the price to enter a new downtrend, that will result in a macro downtrend, not a little correction down, not a little move down to 28.4, not a little breakdown like this. This is very possible. We are still in a macro uptrend. Guess what, guys? We are in a weekly uptrend. We are in a weekly uptrend until, and I think my chart is a little bit wrong over here, so let me go ahead and zoom out to the daily. We are in a weekly uptrend for Bitcoin whilst we remain above this high time frame uptrending support level. It doesn't matter what happens here. Doesn't matter. It doesn't matter what happens here. As long as we provide support above 28.4 and this major uptrending support level, we will continue upwards. But for the price to lose this level and continue downwards, those conditions have to be met. They have to be met. And if they are met, the price will enter a macro downtrend. It will enter this high time frame downtrend. It will eradicate the strength we are seeing on the macro chart. It will delay the bull run potentially, and it could potentially impact the 4-year cycle depending on how long these conditions play out for. I do want to go ahead and say as well, if you're basing your decisions now on potentials, such as interest rates, what it could do, you have to remember, what the government tell you and what the government do are 2 different things. Watch what they do, not what they say. They are saying we're going to get 2 more interest rate hikes. take it with a grain of salt. Take it with a grain of salt. I'm not saying it's not going to happen, but I'm saying take it with a grain of salt and focus on how you can prepare yourself in those scenarios based on your risk tolerance, based on what the market is doing to capitalize no matter what happens. Because as a trader, it's not about being right. It's not about being wrong. It's about making money. So focus on the charts, focus on the data, watch what happens. The data suggests if we break above 32,000, we are going up. It doesn't matter. The bearish signs we are seeing on the weekly chart, the bearish indicators which are developing as a result of strong sideways consolidation after a large move upwards will be eradicated. The price will move upwards on a macro. If we correct here, the bearish strength will increase, but it does not take control of the direction until this uptrend is lost. Keep it realistic. Focus on the data. Focus on the charts. If we lose this level, yep, we are going down. There is no doubt about that. We're definitely going down. But until then, the trend is up. The trend is your friend. Trust the trend, trust the data. Focus on the charts and be calculated in your decisions. We're not here making money based on emotions. It doesn't matter if you're right or wrong. It doesn't matter what anyone says. Focus on the data, focus on the facts. Thanks for watching, guys. Hope you enjoyed. Check out the Crypto Academy courses at gmail.com. It is our 10-unit course over here. We teach you how to trade. We teach you everything we need to know and get you guys knowing about trading, technical analysis, and understanding price action. Thanks for watching. See you guys in the next one. Hope you enjoyed.